Hey traders, welcome to Charts and Coffee. Hope everyone is doing well. This Tuesday morning, we're going to take a look at the economic calendar before we jump into the questions. And as always, phone lines are open for your requests. Feel free to type in the symbol you're looking at. What time frame might it be? Are you in the position? Oh, wait a minute. How come I hear myself? That's not good. There we go. So something turned on. I hate when I hear myself. Weird. Anyway, oh, it starts at coffee. All right, there we go. All right. So anyways, if you have a question, feel free to type it on in. Let me know if you're in the position or looking at it. What time frame are you looking at? Right? Little things like that are going to make a huge difference in terms of how long we might be in the trade, what time frame we're going to set the trade up for, which direction even we might end up taking the trade in. All right, so with all that being said, let's take a look at that economic calendar. A couple of things we can look at this time of year. There's actually 3 calendars. I know. Let me explain why. First of all, this is probably the easiest calendar to use. This is Forex Factory. I know the clock is right on top of the logo, but it's forexfactory.com, just like it sounds. And their calendar is a really good one because a lot of times traders don't know which hot zone is the red hot one, which is the one that's going to have the impact. And this gives that nice little color-coded icon, which is where I got red hot zones from. This is why I call them hot zones. They're literally hot. And if we take a look at these hot zones, which again, why do I call them hot zones? They're scheduled, high impact economic events. And ideally, hot zones are the kind that are macroeconomically important. So what is macroeconomically important? Anything that has to do with inflation and jobs. And I would say a distant third would be growth. What is not a macroeconomic hot zone? Earnings. Earnings are not macroeconomic hot zones. The Federal Reserve is not changing their mind about what they're going to do or not going to do based on Apple earnings, right? So keep in mind, there's a big difference between the fundamentals of a stock and the macroeconomic data points that change the messaging and ultimately the monetary policy of the Federal Reserve. 2 very different things. That being said, they're really important to track because they're going to introduce volatility, right? So while I'm always going to be paying attention to macroeconomic hot zones, there are obviously more fundamental hot zones we need to keep an eye on. So start your morning off with Forex Factory, know what's coming up. Today, it's actually pretty quiet. We had a housing number yesterday at 10 with the NAHB housing index. And today we have building permits and housing starts at 8:30. And then that's pretty much it. So pretty quiet. Now, don't put your guard down because then we have 2 FOMC events. We've got the March 20 meeting, and then we've got Federal Reserve Powell speaking on Friday. So a little bit of a reprieve before we get into the rest of this week, which is going to be scorching lava red hot. All right. Now, there's a second calendar I would recommend. I mentioned there's 3. I would also check out Trading Economics because when we're not in that blackout period before FOMC meetings, there are many FOMC speakers that are scheduled to say something about something. And more often than not, if it's not on Forex Factory, it will be on Trading Economics. So that's really the other reason I keep an eye on that. This time of year, we're winding down earnings season, or are we winding up? You notice that they sort of overlap, right? Well, we're no sooner finishing earnings season and we're gearing up for earnings season. It's like it lasts all year long. It's almost like hurricane season in Florida. When is it not? So now we have this gearing up for the next batch of stock hot zones, right? The earnings. And we're about actually less than 4 weeks from just winding up again with those financials. So there's a neat stacking of if those financial stocks are hitting higher and we have the earnings inside of 4 weeks. There's a nice rally into earnings effect that overlaps the trend and that makes the swing trades two things. One, typically have some really good follow through, but two, we know there's an end date. We know there's a date at which there's going to be an immense amount of volatility. We know this might be the time to jump off the ride. So there's a lot of interesting things happening with earnings. And these are all things that we're gearing up for in the Sector Secrets Mastery. I know a lot of you were with us for the trial period, our 30-day trial period last month, and got to try out a bunch of things we've never done before, which is we typically don't do trials of the daily price movement ranges. We typically don't do a lot of things when we give that 30-day trial. So this is a trial like we had not done before. And I know a lot of you are gearing up for the class that we have coming up on April 13. The first webinar is going to be April 3, which is basically 2 weeks from now. So if you haven't penciled it in, we got a date, April 3. If you can't make the April 3, we're going to be meeting again on April 10, and then the class is on the 13th. And we're going to talk about what's been working this year. How are we growing accounts this year? Really important. If you've been watching Charts and Coffee, you know I've been pretty much telling everyone as much as I can with as much data as possible to focus on the long side, to buy the dip. We don't know how long this is going to last. But do you think that you're going to have uptrends at different points in your career? Whether that be Q1, Q2 of 2024, or whether that be Q4 of 2027, right? You're always going to have periods of uptrends. You're always going to have these periods where when I say uptrend, you know what I think? Account growth. My favorite two words, account growth. That's what I think. And I know that if I can identify those periods of time quicker and with more confidence, I can take advantage of a really great. It's as if we're at the plate and the pitcher is throwing underhand. Forget knuckle and curveballs. They're throwing underhand at us, right? Is it still a pitch? Yeah. Could we miss? Sure. But probably not. And that's what I think about how quickly and how confidently can we find these uptrends and take advantage of them for as long as they last. And it's not a matter of just right now, although we have uptrends in place and we have an election cycle, which is generally bullish, and we have a dovish pivot coming from the Fed, which is also bullish. So why not talk about what's working right now in that regard? But how best do we do that? How do we automate the process? And frankly, who cares what I have to say unless I can show you that the alerts we're doing in the mastery are, and these are only mastery alerts, because what I do populates in the mastery. I'm not off in the corner doing other things and then having mastery trades, right? Whatever I am doing is the mastery. And this is what we've been doing so far in it with our swing trades. This doesn't even include the day trades, with the swing trades. Swing trades right now are really great. Although we did have a couple cool day trades in the mastery yesterday, swing trades really right now are exactly where we want to be focusing. So that's where we are. So I'm looking for some questions, and let's see what we've got here. Good morning. Good morning. All right, here we go. Thank you, JP. Between Visa and American Express, which XLF stocks look strongest? Okay, so this is what we do. This is the process. I'm a big fan of relative performance scanning, which is to say, what does relative mean? Relative to what? What's the commonality? What's the common denominator? What's the factor that makes them related somehow to each other? Well, the inclusion in a sector ETF like XLF, or the inclusion in an index like the S&P. If I'm going to compare from a relative performance standpoint, these are both good. These are both good, solid uptrends, JP. I probably like, maybe because of the fact that we've been in and out of this thing 4 times, I probably like American Express a little bit better. Visa is very, very good. Visa, we've been in and out of once, if not twice. But as long as I'm not, so let's focus here. It's actually, JP, it's actually better to focus on what not to trade. What's not working? Where is it a waste of time? Right now, I would avoid Berkshire. I would avoid Goldman, and I would avoid Chubb, right? So it's really easy to say what not to trade at the moment. And those don't actually right now make sense, because if I have better structured names like Citi, like Bank of America, like Wells, right? So it's really not just those two. And I don't know which I would say is better than the other. Like I said, I probably have a little bit of a bias with American Express, but they look very similar. And one added bonus you might get from Visa is not only is it sinking into the daily price movement range, which, by the way, for those of you that have been wondering, Rog, how do I get my hands on the daily price movement range? How do we use these volatility tools? This is a category unto itself. Volatility tools using historical volatility, where we are every day proactively mapping support and resistance on a chart. This is a category unto itself. This is not a set of tools that really exist anywhere else. And the reason that they don't is, well, you got to curate the data in a very specific way to get the accuracy of, well, what could Visa do over the course of the next day? What could Visa do on a Monday versus a Tuesday? I mean, that's the kind of specificity we need. Now, if I can get a DPMR pullback and a mean reversion, great. That's going to be Visa. If I'm looking for just the daily price movement range, which has been ridiculously accurate, American Express. So there's a little nuance between them. As far as GE goes, I know a lot of folks, let's do the same thing here. Let's crack open XLI and get into whether GE is still a good play, but that can't be the only question, right? And I know you know that, JP. So what I'm going to ask myself is what else could be good in this group? GE and CAT. GE and CAT. Now, there might be other stocks that are ticking up because XLI, generally speaking, itself is quite a strong, and let me move this over so you can see what's in the corner there. That's XLI, that's the industrials. And that's moving higher as well. So the tide's moving higher, and the two biggest boats in industrials are also, they're moving higher too. That being said, is GE still a good one? GE had a very strange week last week. And only now, daily price movement ranges and volatility are not only support and resistance, but they're warnings. When they start to get closer together or crisscross, we're dealing with abnormal historical volatility reactions. It's just a warning. This is not normal. Wouldn't it be great to wake up in the morning and say, hey, the market tells you this is not a normal day? It's kind of what daily price movement ranges are trying to do. This is not within normal volatility parameters. So that being said, GE had a weird week. It's only now are we starting to see those daily price movement ranges normalize, bringing us the kind of more predictable movement that we would like. And that's where I sit on GE. But keep an eye on CAT as well. All right, what's going on with the Russell? The Russell has a really tough task. Relief, it has a really tough task. And that is the number one weighted sector within it continues to struggle. And when I say struggle, when we think about financials and the way in which financials are influencing the S&P and the Dow, and when we think about the way, for example, industrials are benefiting the Dow, or the way that even tech, communication sector, XLC, has been really strong. When we think about what's happening in those corners of the sectors that are heavily weighted, KRE is that conversation with the RTY. And RTY is going to struggle because its number one weighted sector is regional banks are still having a hard time. So in terms of what's my take, my take is basically day trade it. My take is if I'm going to look for a swing, I'd rather be looking at places where the trend is far stronger and far more steady. I don't have a steady trend. I don't have a really consistent trend in the Russell because, well, if the KRE is a cylinder in this motor called the Russell 2000, it's missing, right? It's a cylinder that's missing. So ultimately, when I look at the Russell, is it buyable? Oh gosh, yes. Please hear me out. The Russell's not in any way in the bearish hemisphere. It's just not a leader, right? NASDAQ, S&P, how many all-time highs have we punched to respectively in each, right? The Russell is struggling because of that reason. As long as those stocks and the regional banks lag, that's going to be the issue. Shorter term time frames, keep with a bullish angle, but let me talk about a trade that we just did, right? Because like I said, I like to talk about things we are doing. I track and show you all the results of the things we are doing in the mastery. Really important to me that everyone realizes when I'm talking about wins and losses, I'm talking about what we do in the mastery. Really important for me for everyone to understand that. NASDAQ is a position that we put on Friday. Friday, we waited for price to sink down into the gray zone. So this is that old saying of in an uptrend where the green meets the gray. I kind of think of it as granimals. Just match it up, paint by numbers maybe, and that's it. Yesterday, we had an up day. So it went from the zone. Where are my drawing tools? It went from the zone that we built the trade in. We actually bought QQQ calls. Overnight trade, initial margin requirements. This made it really financially okay for just about everybody, whether you buy one QQQ call or whether you buy 10 or even 50. This is a very scalable option, regardless of your account size. So that said, we moved from the gray zone, boom, to our target, right? And here's a cool thing. Notice that I don't have a pie in the sky stratospheric target. Today we're struggling a little bit. It's an inside candle for now. We're trading within the low and the high of the previous candle. But the cool thing is I've already paid myself. The cool thing is we've moved to break even. We've already added something to our account, and the rest of it is, at this point, house money. So notice the likelihood for follow through in something like the NASDAQ or the S&P, where the trend is already strong and up. One of our members said, Rog, I've got the tools. You've taught me how to do this. I took Meta, right? And I love that. I love that. Someone said, hey, Rog, if you're buying QQQ and XLC, this is the sector secret connection. If you're buying QQQ and XLC is the best looking sector in the NASDAQ, Meta is the number one stock in that sector. I'll buy that too. And once you start realizing these overlaps open up the market in a very connected way, then all of a sudden you realize there's a lot of opportunity. You know how to keep your pipeline full, not just of staying busy, but of high quality setups. And that matters. That matters a lot. All right. Next up, on my third cup of coffee already, Twitchy. Oh gosh, Lorna, make sure we mute him when he's in the mastery. How you doing, Twitchy? How you doing, my friend? Oh my gosh. I'm slacking. I'm just finishing my first espresso of the morning. All right. Moving on to our next question. Tish asked, do I have a discount for TradesViz? Tish, I don't have any kind of discount. We'll get back to you. I don't believe we will. They have sales, I believe, from time to time. All right, but thank you for that question. They usually have a Black Friday sale. By the way, Tish, and I tell this to everybody, if there is a service I'm using, it could be TradingView, it could be TradesViz. If there's a pay for service, believe me, I pay for it, and I get offered to be comped everything. And my personal belief is, if I'm going to ask you all to pay for it, you better darn well know I'm going to pay for it myself. And look, I run my trading as a business. These are write-offs, right? It's the way I look at it. I run my trading as a business. I like all these offsets to my profit gains, right? I need them. I'll take it. So anyway, I usually renew around, if I recall, Black Friday, and it's usually really good sales. But I look at some tools, whether it be tools like TradesViz or even my own tools, they should pay for themselves, right? I'm a big believer in that. One of the things that I loved, we had a number of people that are in the mastery right now, the Sector Secrets Mastery. They took the QQQ on Friday. They're brand new members. And one of our members said, Rog, I didn't buy that many QQQs. I don't know how many he bought. I should have asked. He said, I paid for the quarter. That's what it's about. This should not, as far as I'm concerned, this should not be something that it's a negative, right? I look at anything that I offer you all, whether that be daily price movement ranges, hourly price movement ranges, whether I recommend TradesViz, whether I recommend TradingView. These should all be net positives. These should all be things where you say, oh, this helped me make money, including the mastery. So that's the way I think about these things. For me, are these things needle movers? And what's a needle mover? Is it ringing the cash register? Is it helping me build my account? If not, I'm not going to use it. So I'm really discerning about what it is I put on my charts. and the tools that I pay for. And actually, every year I'll buy a bunch of tools. I'll look back 12 months later and say, hey, was this a needle mover? And if it's not, I'll cancel, right? But I give it a shot. I usually like to give it a shot of about a year, right? We want to go through a couple seasons of the market before we make any judgments. All right, so that is it. All right, gang. So as always, thank you so much for being here for Charts and Coffee. And I will see you all tomorrow, same time, same station. Yes, and if you haven't written down already, April 13 is the upcoming class. April 3 and April 10, we've got our webinars coming. That's just about 2 weeks away. So if you're thinking, all right, Rog, yeah, I want to see what it is you're doing. I want to get an idea of what you're using to get this kind of result. And I'll update March's results, which it's been less active than say February, but we're still on that upward trajectory. That's all that matters is your P&L in an uptrend. That's our favorite uptrend, isn't it? Be good to each other, gang. I will talk with you soon.